we've got to do the share screen again. Here we go, one more time. And we'll do it on screen share. So I'm trying to get to presenter mode. Now I've got to presenter mode. Give me 1 sec. Back to here, and we can go share screen. And we want that one there, share. All right, are you seeing that down, Terry?
Yes, we're there. Well done.
Great, okay, perfectly. Sorry about that, folks. We just had a little glitch there. So the point I was going to make about vacancy rates is that the vacancy rates back in 2022 of January compared to today are significantly lower. So our vacancy rates are really at critical levels. We're seeing at Sydney 1.3%, Melbourne 1.2%, Brisbane 0.8%, and look at Perth 0.4%, and even Hobart, Adelaide 0.5%. I've got some friends trying to rent a house down there, finding it very, very difficult at the moment. So the national vacancy rate 1%. Have you ever seen it this low, Terry?
I haven't, Rich, and that's because it never has been this low. I think all the data from the various data providers confirm that these are the lowest vacancies that we've ever seen in Australia since they started keeping records. And I've been doing what I do for 4 decades, and I've never seen it this tight. And probably the key message is that it's probably going to get worse before it gets better, because there's no solution in sight. The state and federal governments of Australia really don't have a clue about how to deal with this. I think the solutions are quite clear and obvious, but they're not seeing it and they're not doing anything. What they actually are doing is probably making it worse by increasing the migrant intake as one example that the federal government has as a policy to fill job vacancies, but they haven't asked the question, where are all these people going to live? So I think vacancies are going to continue to go down, and that means rents will go up, as they have been doing for the past couple of years. And I think that these are the most important data sets that investors right now should be considering. The media obsesses with what's happening with prices, and of course that's relevant to people, but I think that this is the most important data of all, what's happening with vacancies and therefore what's happening with rents, because at a time of rising interest rates, we have a compensating factor. We have much higher rents and improving yields.
That's a really good point, because everyone who's sitting on the fence going, should I rent or buy, and that's going to be the subject of my next newsletter, was the subject of my last newsletter, is that, you know, for the investor, by being able to put up your rent, you're able to hold on to that property. And it obviously was probably in positive territory when interest rates were really low and you could get a 2% mortgage rate. Now your mortgage rate is going to be probably at least 5.5% or 5.75 after the last rate rise. But as Terry said, you know, the vacancy rates are driving the rents higher, and they'll continue to rise. Suddenly, you know, we're not going to have another 100,000 dwellings coming up out of the ground in the next 6 months. So the supply and demand equation is absolutely going to dictate that rents will continue to rise.
All the building approval figures, Rich, are dropping at a time we need more supply in the market. For various reasons, the building approval numbers are dropping. Mm-hmm. So we're not having the amount of supply we need to come into the market at a time when demand is going to increase, with more students flooding in and more migrants coming in, apart from the other sources of demand. So this equation is going to get worse for tenants and better for investors.
So Terry, another question for you. Have units outperformed houses in terms of capital growth over the past 12 months? What are the figures showing you in that area? And I'll bring up some slides for you to sort of talk to about that as well.
Yeah, look, it's really interesting because, as we probably all know, the dominant paradigm in real estate is that houses over time tend to outperform apartments on capital growth, and it's deemed by people to be the land content. That's the key factor. But I think that the paradigm is changing. We have seen in the past 1 to 2 years examples where in specific locations apartments have outperformed houses in the same area on capital growth rates. I think, and we're seeing it in our figures when we're analysing demand, that locations with close to things that are important to people, where apartments are significantly cheaper than houses in the same area, we're seeing an uprise in demand. We're seeing that in Sydney, we're seeing it in Melbourne and Brisbane, and some of the iconic coastal markets as well. So that's starting to show up in some of the price figures. So these are the figures for what happened to house prices in the capital cities of Australia in January, according to SQM research, and it shows that more positive than the media is telling us. We saw house prices rise in 4 of the 8 capital cities, but although according to these figures still falling in January in Sydney, Melbourne, Hobart and Canberra, but quite a positive outcome. But the next slide shows the same situation in January from the same source, SQM research, for apartments, showing that in every capital city except Canberra, we had median prices for apartments rising. So a much stronger performance overall by apartments in the month of January than we saw for houses. And this is a trend that's been emerging in recent months, and also in annual terms. If we look a bit further into the slides. So SQM Research has more recently published their figures for what happened in February. And so they have, again, 4 of the 8 capital cities showing increases in their median house prices. And the national situation for February, according to this source, is a slight increase in house prices. And then the next slide shows us what happened with apartments. And again, there are a greater number of capital cities in which apartment prices rose compared to house prices. So we've got 5 of the 8 capital cities in February producing healthy increases in their median prices for apartments, and nationally also a small increase. So there's been overall, based on those figures, some pretty good performance in recent months since the start of the year. And it's interesting to look at these figures. And I'd like to point out to people that there are other sources, good, reputable, credible sources of information other than CoreLogic, who tend to be the most negative in terms of what their numbers show. And media tends to latch on to that and present that as the gospel truth. But there are other sources like PropTrack and Domain and SQM Research, which have other numbers which tend to be more positive in terms of what's happening with prices.
I think the other point to make too, Terry, is that there's a lot of suburbs that go up to make Sydney and Melbourne. Like Sydney's almost got 700 suburbs, and you'll actually find that some suburbs have gone up in Sydney while others have gone down further to give an aggregate number that appears on your screen. So any research that anyone does, try to be as localized as possible, because averages, don't mean a lot across the board.
Yeah. I often say that the curse of property investors trying to figure out what's going on is generalization in the media. They tend to talk about Australia as one market, or they talk of Sydney as one market. Here's what's happened to Sydney prices in the past 12 months. And as you've just pointed out, it's really doesn't help people at all, because there are over 700 suburbs in Greater Sydney, and they're as diverse as Manly versus Campbelltown and Bondi Beach versus Penrith. I mean, and they throw all of that into one big melting pot and produce one figure and say, this is Sydney. And of course it's not.
That's right. That's right. So Terry, I've got another question for us to discuss. And this one is, there's been a lot of unit developments in capital cities in recent years, and with densities increasing in most cities. Which cities do you think will continue to see that development? And which cities are likely to have the highest densities?
Well, I think it's, in simple terms, it's going to be the biggest cities. They're the ones that are having the greatest pressures on how do we cope with population growth without ever expanding the footprint of the city, and also giving people dwellings close to where they need to be. So certainly in Sydney and Melbourne, we're going to see increased densities, and that's part of the planning also to cope with population growth without having urban sprawl. We're also seeing it happening in Brisbane, and I think that's going to continue. Perhaps less so in the smaller cities that have greater availability of land for housing developments. As we're also going to see increasing development of apartments as an option in some of the iconic coastal locations. The obvious one being places like the Gold Coast. The Sunshine Coast is a location, incredible growth factors in the Sunshine Coast, one of the growth stories of Australia. And they've got a huge problem with how we're going to cope with all this population growth, because they want to maintain the lifestyle. They don't want to have just growing population just detract from why people come to live there in the first place. So they're trying to have more and more of the population in medium, in greater density, basically.
I mean, that's the classic case of a location being overloved, and we'll get into more of those specific locations in a few more slides. But I think from my perspective, Terry, I think the planners really have a difficult task in trying to bring about greater density in the cities to stop urban sprawl, but also to create an amenable environment for medium density living. And again, this is what's been missing in both Sydney and Melbourne particularly, and maybe some parts of Brisbane, is that medium density. So the low-rise unit blocks and the low-rise or like two-level townhouse developments. So in Sydney, they call it the missing middle, and they've actually got a specific policy that the state government tried to roll out, but a lot of councils rejected it because, and there was a big debate about it, because a lot of it was just going to be approved as what's called complying development, where you didn't have to actually go through a council determination. As long as the setbacks, the height limit, the floor space ratios were all compliant, then it could just be started to build and you just get a construction certificate. And that would have made a really good option for a lot of downsizers. So a lot of suburbs where there's very, very little option apart from having a house on a block of land, a lot of people don't have any other option but to move out of that suburb or age in place. And a lot of people are staying in their properties longer because they don't have these medium or high density opportunities to go to in the suburbs. Yeah. So there's always a pushback from neighbours going, I don't want a high rise or a townhouse developed in my backyard. But once people get in their 60s, 70s and 80s, suddenly they realise, gosh, I wouldn't mind actually moving into a townhouse because it'd be less maintenance.
Yeah. Well, I think one of the great reasons why we are seeing an uplift in demand for attached dwellings is because of the downsizer market, which is becoming a more and more influential part of the market. We do have an aging population. It is a factor for more and more people that the kids are now adults. We're rattling around in the 4-bedroom, 2-bathroom family home, which is a lot of work to maintain, and it's no longer appropriate. So I actually think that this is something that should be more of a focus of government, where they need to provide incentives for people to downsize, because the cost of selling and buying can be prohibitive for people. But it's certainly, this is a source of major demand for apartments, is one of the reasons why the paradigm is switching and more in favour of apartments now.
So Terry, I want to turn now to the big question on everyone's lips, and why we held this webinar was, houses have traditionally been seen as superior as an investment stream for capital growth, with the value being held in the land. But research also shows that units might actually be a better purchase. Do you believe that's the case? Might it be sometimes better for an investor to purchase an apartment over a house?
There are certainly many instances where that is the case, and where it's not a blanket generalization. There are dark areas where I would urge investors to stay away from, particularly those areas where there's huge clusters of, multiple high-rise buildings with generic apartments in them. But there are certainly instances, and we've seen it over the past 1 to 2 years, where in specific locations we've seen pricing for apartments rise faster than pricing for houses in the same location. And so we're seeing that increasingly. And I think it's two main reasons. One is affordability, and the other one is just lifestyle. It's a low maintenance lifestyle. It's a lifestyle that allows you to live with a view, perhaps, that you can't get from a house. There's all sorts of reasons why people might opt for an apartment lifestyle, not just affordability.
Yeah, I think there's, again, you can't just make a hard and fast rule, as you say. There's plenty of exceptions to any rule. And I think in both Sydney and Melbourne, there's some great opportunities to invest in apartments. In Melbourne, you've got some beautiful areas around St Kilda, around the wharf and the Bayside areas. In Sydney, you've got Bondi and Manly, two classic beachside locations where capital growth has been phenomenal for units, albeit at a lower price point. And they've done really, really well. So there's certain suburbs that I can name off the top of my head where I'd be very happy to buy an apartment, knowing that it's going to be locked in for really strong capital growth. Terry, let's have a look at some figures that you put together for this presentation as well. And just maybe we can talk to some of these points here where we compare just the last year, for example, and also some other years. And let's go through some of these suburbs.
Yeah, well, just before we look at individual suburbs, we're just going to look at the latest figures from PropTrack and comparing what's happened with pricing for houses and apartments. And what this slide on screen shows is that in every instance, we've seen better performance with apartments in the last 12 months than we have with houses. Now, PropTrack is the research arm of realestate.com.au, so a major credible source, an alternative source to CoreLogic and Domain. And according to their figures, as at the 1st of March, in the past 12 months, across the country as a national average, houses have dropped 3.7%, which does put some perspective on some of those dire newspaper headlines that prices are crashing everywhere. Clearly, these figures show what we have is perhaps a correction, but certainly not a crash. But for apartments, also down, but less so than houses nationally. In capital cities, again, apartments have dropped a little, but not as much as houses. In the regional areas, as an average across the country, houses are down a little, 1.1%, but apartments as an average across the regional areas are straight up 3.3%. In Brisbane, houses have dropped a little, apartments have risen almost 5%. Regional Queensland, similar result, slight decrease for houses as an average across regional Queensland, but a rise of almost 6% for apartments. Adelaide, I actually think, that minus should actually be a plus for Adelaide.
I'm thinking that should be the other way around.
That is a typo.
Yeah.
Adelaide's up 7.7% for houses, but it's up 9.7% for apartments. In Canberra, definitely houses are down 7%, but apartments are up slightly. Sydney, both houses and apartments down, but less so for apartments. And for regional New South Wales, a slight fall as an average for houses, but a small increase for apartments. So in every instance, there's been better performance from the apartment market than for the housing market in the past 12 months, according to PropTrack.
Yeah, it makes intuitive sense as well, because obviously houses are coming in with a higher value and apartments are a lesser value. So Terry, let's talk about some specific areas and just have a look at the performance. You picked some really good suburbs that I think we can talk about.
Yeah.
So first one is Coolum Beach, on the Sunshine Coast, which is a beautiful area.
It's a wonderful area. It's been underrated, I believe, for a long time. It's been a more affordable alternative to Noosa, which is a little bit to the north of Coolum. The figures, if we looked at the growth figures 6 or 12 months ago, they would have been above 40%, both for houses and apartments. But what the figures do show is that the growth for apartments has been slightly more than the growth for houses. The long-term growth averages, which are extraordinary, and that's mostly the growth that's been happening in the last 3 years. I always thought, this is the 10-year growth average for capital growth. Anything up to 8, 9, 10% is good. But when you're getting 14 and 16% as an average, that's extraordinary. And apartments, again, have outperformed houses, although both have been very good. And then, of course, the other factor is that yields in terms of the medians are higher, which is pretty much the case everywhere, any suburb you look at. And you've got to keep in mind that there are additional costs with apartments, but nevertheless, you do get a better gross rental yields for apartments than for houses.
Great. One point I'd make that you made before is that obviously you don't just look at a 1-year result and extrapolate that. It's also good to look at a 10-year average, but also look at what's driving the average, all of the driving factors of that area. But the Sunshine Coast has definitely got a lot of potential. I was up there at the end of last year, and every time I go up, I'm amazed at just how much infrastructure in terms of roads and schools and the hospital there expansion. And it's just a really lovely environment. And obviously affordability is driving pricing. So I think the 10-year averages will probably, I don't want to predict it, but I think they'll come down to a more normalized rate, but they still could be 10%, depending on how it goes.
Yeah, yes, they will come down because right at this moment, there's less heat in the Sunshine Coast market and the growth rates are subsiding a little bit after 3 years of extraordinary growth. So inevitably it's coming back a bit, but long term, the Sunshine Coast is going to be a performer.
So let's have a look at another one on the sunny coast. We'll rip through some of these. Caloundra next, and then we've got Service Paradise.
Yeah, Caloundra has always been like the poor cousin of the Sunshine Coast, right down at the southern fringe, versus the high-profile Noosa up in the northern fringe of the Sunshine Coast. But it's become very gentrified and improved a lot in terms of what it presents as a lifestyle more recently, and particularly with apartments. And there's actually not that much of a gap between house prices and apartments. There are a lot more apartments than houses in the suburb of Caloundra, but in the last 12 months, extraordinary growth in the median price for apartments, double what we've seen in houses. The 10-year growth averages are slightly higher for apartments, and again, the yields are a little bit higher. It's unusual, Caloundra, that the pricing is so close, and most examples we look at, there's quite a differential. But that reflects recent development of modern, quality apartments with great water views and access to a variety of beaches, and also the inlet where there's calmer waters as well.
Yeah. I'm always amazed at how much the council is spending on upgrades, like the foreshore areas all along there. Just beautiful. Just really hats off to having a progressive council and getting that done.
Yeah, there's been massive improvement in the lifestyle in Caloundra. It's no longer the poor cousin of the Sunshine Coast. It's an area where we're still seeing very strong demand at the moment on the Sunshine Coast.
So let's go a little bit further south. Let's have a look at the Gold Coast. Let's have a look at Surfers Paradise. What's happening in the market there for houses and apartments?
Yeah. Look, I always hesitate to feature Surfers Paradise because I think it has been for a long time a very poor performer. It's prone to bouts of oversupply, but in the last couple of years, there's no doubt that the Gold Coast has performed very well. And there's a huge number of apartments sold every year in the suburb of Surfers Paradise. And because it's so affordable, partly the reason why pricing is so low compared to houses, but also compared to apartments in other parts of the Gold Coast, is that pricing has been kept low because of past oversupply. But in the last 12 months, there's been good growth, and it's lifted the 10-year growth averages, not as strong as those we just saw on the Sunshine Coast, but an improvement of what they were up until a couple of years ago. So a big price differential there between houses and apartments in that suburb. Obviously an iconic location. I would still hesitate to suggest that this is a great place to invest. There are better places, I think, but the numbers on the screen do show something about what's happening at the moment.
All right, fantastic. So let's take a trip down to Sydney, and we'll have a look at Bondi Junction and then Newtown. So what's happening at Bondi Junction?
Obviously, one of the iconic locations of Sydney and Australia, and apartments are expensive for many people, but nevertheless, the median price for apartments is almost half that is for houses. And whereas the median for houses in this location have dropped a little in the last 12 months, it's actually increased a little for apartments. The 10-year growth average is better for apartments in this location. And again, the median yield is a little bit better as well. So,
okay. And I'm curious on this next one, Terry. I think I raised this with you just before our presentation, is Newtown, classic, great suburb in the inner west. Just really curious about the 10-year average. I don't know if I trust that figure, but tell me, where are we sitting with these numbers?
Yeah, I'm not sure I trust that figure either. But what I'd like to say to people is that I think one of the most important things to keep in mind as investors is that things are always changing in real estate, and sometimes the best places to buy are places which appear to have a bad track record. The past does not inform the future when it comes to where you choose to invest. When something is changing in a market, that's when when it's the optimum time to buy, and quite often you have to ignore the track record. The Sunshine Coast we've just looked at is a great example. 3 years ago, you would not have bought there based on the track record of capital growth, but it's been one of the nation's best performers over the last, because something massive changed there around the huge investment in infrastructure and what that did to the market. So Newtown, great location, close to one of the major universities of Sydney. It's a part of the inner west, a local government area. There is rising demand for apartments there. And one of the reasons is you can see the price differential between the median for apartments and the median for houses. A very good location, close to a lot of important things in Sydney. And those numbers will change. Apartments will become more expensive, I'm sure. And the 10-year growth average will become a lot more positive over the next, say, 3 to 5 years.
Brilliant. Okay, and let's trip down to Melbourne, Richmond, Victoria.
Yeah, another great example of a high-profile, iconic inner city suburb where houses are quite expensive, but apartments relatively are pretty cheap, less than half the price, which is why I think, this is a sort of location that people might consider investing in. And Melbourne market has dropped in the last 12 months overall, not by much based on these figures. Apartments have held up better with their pricing than houses in Richmond. And the 10-year growth average is a little bit better. And of course, again, the median rental yield is higher. But this has become one of the trendy places of Melbourne. And if you could get into an apartment as a first home buyer or as an investor for that sort of pricing, and I think you're probably invested wisely.
Great. And the next one, let's head back to Brisbane, to Newmarket.
Yeah, there's lots of potential examples for Brisbane, but this is one where, again, I'm highlighting a couple of things. One is the difference in the medians. Median price for apartments less than half that for houses. So people who just can't afford 1.2 million, possibly 500,000 is within their grasp, even with higher interest rates. The growth in the last 12 months is higher for apartments. There are still areas of Brisbane where prices have continued to rise. Again, that generalised figure for Brisbane is negative, but there are lots of positive examples. The 10-year growth average is better for apartments. And again, the median yield is higher.
Yeah, I think a lot of apartments in Brisbane have had a bad rap. There's certainly been places like Newstead, New Farm, where there's been huge volumes of apartments built, and apartments that have went nowhere in terms of pricing, really little or zero negative capital growth at some point. So
well, that's right.
To see that come out of that negative cycle now into a new growth cycle.
Well, that's right. That there was a period of oversupply, and it took a number of years to soak that up, and we saw prices fall and we saw vacancies high. Where Brisbane is beyond that, and I suppose the big factor that we haven't mentioned yet is the 2032 Olympics. And what the research shows is that the greatest impact for real estate is actually in the lead up to the event, not after the event or during the event, because there's going to be a massive infrastructure spend to prepare for this event. It starts now; it's happening already. Even though it's almost 10 years away, we're starting to see the projects being rolled out to prepare for the event. And what the research shows is that the locations closest to the big event venues for the Olympics are the ones that show the best capital growth. So the biggest event venue, the Olympics is going to be spread across Brisbane, the Sunshine Coast, the Gold Coast, Toowoomba, other parts of Queensland. But the main venue is going to be the Gabba, where they have the cricket and the AFL. It's going to be redeveloped at a cost of over $2 billion. Suburbs close to that
they'll get some really good spin-off growth. So, and what about East Brisbane too? Tell us just as the last one.
Yeah, I mean, this is a pretty good suburb, not far from the CBD of Brisbane, and a neighbour of Woolloongabba, which is where the Gabba is. So it's going to get some of that Olympic uplift. And again, you can see apartments typically less than half the price of houses. The growth in the last 12 months has been considerably higher for the apartments than for houses. The 10-year growth average hasn't caught up for apartments yet, but I would suggest as we go forward that might change. And again, the median yield is much higher for apartments. This is a pretty good location in Brisbane. It's close to so many things that are important to people to be near, and I think we're going to see some good capital growth on this location going forward.
That's great. Fantastic. So I'll just stop share again for a minute. And I've got another question for us both to discuss, Terry, and I'll put in some ideas on this one too. But I guess the key question is, what are the benefits for investors in thinking about buying apartments over buying a house? So I'll kick this one off if you like, and then you can add to it. I think one of the key things, I think I mentioned in my introduction for apartments, is typically the location. You can buy closer to a waterway, closer to a train station, closer to some key amenities within walking distance than you can with houses at a much more affordable price. I think that's the other thing is the price point makes it a lot more attractive and achievable to get your foot onto the property ladder without having to fork out, millions of dollars. The other thing is maintenance and the building style. So typically, if you buy an apartment, there'll be a body corporate or a strata that will be managing the building. There'll be insurance over that building, and you contribute a quarterly fee to as a levy. And so it's kind of forced savings in a way. And I guess one of the traps for some people is not doing a strata inspection. So if you ever buy an apartment, make sure you get someone to do a full strata inspection. That is, go and review the minutes and give you an interpretation of any special levies or any issues that have been in that building. Another benefit, I guess, is having the ability to lease that property and also create a sense of community. You've got other people around you. So some people, if you're a home buyer, they really like to have that sense of security and being in a secure block, secure parking, and have someone who's really close by as a neighbour. So what else, Terry, would you say would be the pros or benefits of buying an apartment?
You've covered most of them, Rich. You talked about affordability, security, proximity, the desirable things, low maintenance. A couple of others. If you're buying an apartment, you've got the view factor, which you know, you might be buying half the price for houses, but you've actually got a view of the ocean or the river or whatever. Better yields overall. There's also we've first seen so many instances of major weather events and flooding in Australia. If you're on the 10th floor of an apartment building, you're not going to have your home flooded.
That's right.
Maybe the basement might take some water, but you're above the flood zone, and that may actually be increasingly a factor for people.
Yeah. Well, actually, and that's a good point, particularly in Brisbane. A lot of the more modern, definitely all the new modern apartments, all of their utilities are built on the roof. All of the buildings are designed to withstand a flood. So a flood comes, no problem. You know, obviously the mud and the silt needs to get washed out, but they've got a much better recovery system in place for that. Just on the flip side, what are some of the negatives or the cons of buying an apartment versus a house as an investor?
Look, I think it really relates to the type of apartment you buy and where. You know, I think if you're buying in an area where there's just masses of high-rise buildings, and there's in each building there's 300 apartments, all the same basically. You know, I think that's a bit of a trap, and we've seen in the past spruikers and others selling off the plan apartments at inflated prices. But those are the sort of risks people need to be aware of. You've got to be careful about what sort of apartment you buy, where you buy it, and at what price. Make sure you do your due diligence to make sure you're not sold at pup. I think that's the main thing.
Yeah, which sort of leads me to my next discussion point, which is what are the sort of key features or attributes that investors should look for when buying a property, an apartment for capital growth. So I think the first thing to be looking for is not so much the physical attributes, but simply the location of that apartment. You know, if you can find out if the area has been rezoned for much higher density, there's a lot of R3 areas that could potentially become R4 or R4 plus, which is super high density. And if there's going to be thousands of new apartments built in those areas, guess what's going to happen to price? Potentially it could be very diluted, like what happened in parts of inner Brisbane or in Sydney and Parramatta, for example, or Zetland at the time. So just be very careful about future supply. The other thing is to look for is to buy apartments with good walkability, being able to walk to the shops, being able to walk to the transport connections, being able to walk to education facilities. All of those things create fantastic amenity for renters that they want. Another key thing is getting an apartment with good aspect and good light. The last thing you want to be is to have your balcony overlooking the south facing and looking into another brick wall where you get no natural light. Make sure it's got good natural light, because that really adds to the feeling of well-being. Another thing is to make sure that you've got parking. I mean, it's not absolutely essential in the inner city areas, but having at least one secure car spot is definitely going to add a lot of value to your apartment purchase. Another thing is to look for potentially a balcony or some outdoor space. If you get the ground floor apartments, some people like to have their pets, and now you can have pets in most apartment blocks, but definitely some outdoor area where you can have a table and chairs, maybe a little barbecue is really important. Terry, anything else you'd add to that list of attributes to look for?
I think it's a lovely summary, actually, Rich, of the qualities you should look for. When we talked about this a number of weeks ago, I think the word we came up with in terms of what sort of apartment people should look for is distinction. We're looking for a word that was a little bit less cliched than unique. We're looking for apartments that have points of difference, some distinction about them. The difference between boutique versus generic. So we're avoiding those clusters of 30-story high-rises in which all the apartments are the same, looking for something with a point of difference. And you've outlined many of the things that can make up collectively an apartment that's got the qualities that will actually show capital growth going forward.
Yeah, exactly right. And look, we've just got 2 more questions before we go to our Q&A. So a couple more questions for you. Are there any particular locations that you or hot tips that you'd be giving to our audience today, Terry, on where to invest? Is there any particular areas for affordability and potential capital growth in Melbourne, Sydney or Brisbane that you'd like to mention?
Yeah, well, just to keep it manageable, we decided to focus on the 3 biggest cities. There's lots of other examples around the country, but the factors for me are good location, locations where the median price for apartments is less than half the median price for houses, because that's when you're starting to think you're getting really good value in a good location. And location that have good credentials for capital growth. So in Sydney, I like the inner west, in particular we've got suburbs like Newtown and Camperdown, for example, where houses are typically sort of 1.6, 1.7 million in terms of median, but apartments are 700,000, 800,000, so sort of half the price, close to really important things like the university or the Sydney University and other factors. Marrickville, remember Marrickville used to be considered down market and stigmatized, but it's become gentrified, and now typical houses sort of you're heading up towards 2 million, but apartments are sort of 700,000, 800,000. So relatively speaking, affordable. Heading a little bit further out in Sydney, some of the sort of outer suburban CBDs like Westmead, which is where there's a lot of university and hospital action, and apartments are sort of medium price, mid 500,000. That's pretty affordable for a lot of people. And Liverpool, as the Sydney airport, the second airport for Sydney rolls out, locations like Liverpool are going to become a lot more important. Whereas many of the suburbs of the Liverpool local government area have houses above $1 million, in Liverpool itself, which is a cluster of, shopping, educational facilities, hospitals, good transport links, median price 500,000. A lot of people, that represents affordability and proximity to lots of important things. So do you have any particular...
I just mentioned a couple, obviously in Sydney. I particularly like the Northern Beaches, Manly, Fairlight and Freshwater. Particularly Freshwater's got a really great village feel to it. Always believe it's going to have really significant long-term growth. I've always seen apartments in Manly, never been vacant, even in the winter months, highly sought after, particularly for Airbnb, great for short stays, and you can get a fantastic yield. I'd say fantastic compared to other cities, but Sydney, for a Sydney yield, you can. Also, the areas that were typically really suffered during COVID when all the students left, like Camperdown, Kensington, Randwick, those areas have actually really started to shine and come back. We're seeing a renewed interest. We're seeing higher yields being achieved in those areas. And then you've got your traditional blue chip suburbs like Coogee, Bondi, and also Lower North Shore, Mossman, Cremorne, Neutral Bay, really appeal to professional renters. And you always find there's very, very low vacancy in those areas.
Yeah. So in Melbourne, equivalent places that sort of tick some of those boxes. My criteria is good location, close to the action, but medium prices for apartments, less than half that for houses. Richmond, I think we touched on earlier, median price for apartments there, 650,000. Hawthorne, not far away, 590,000 is the median price for apartments, whereas the median price for houses is 2.8 million. So quite a differential there. And, obviously a very good suburb close to a lot of things. I like North Melbourne. You've got this massive cluster of hospitals and universities in the North Melbourne, Parkville, Carlton precinct. And North Melbourne is a suburb. Median prices are 1.3 million for houses, 550,000 for units.
Yeah.
And then you've got Brunswick, not so far away, similar sort of price differentials, a really good sort of suburban hub, a little bit north of the CBD, lots of action there, and affordable. 590,000 is the median price for apartments. So,
cool.
So Melbourne's got plenty of good options too.
Yeah, I'd throw in Carlton, Lygon Street, famous Italian area. It's really, really strong in addition to all this there as well. And any other tips in Brisbane as well, Terry?
Yeah, I think Brisbane's got increasingly good options in this regard. Now, Clayfield is one of the prestige residential suburbs a little bit north of the CBD in Brisbane. You're paying upwards towards $2 million for typical houses, but the median price for units is 445,000. So you've got an opportunity to buy in a very prestigious suburb close to lots of desirable things for a relatively affordable price. I like Annerley, which is close to one of the major hospitals, easy access to University of Queensland, and close to Wollongabba, where the Olympic action is going to be. Median price for apartments there, 470,000 at the moment. West End, developing a great lifestyle, a little bit different to South Brisbane, close walking distance. You mentioned walkability. West End is a great walkable suburb in terms of South Bank, the cultural centre and all of that. They're building a series of green bridges across the river, so you're going to be able to walk from West End to Toowong across the other side of the river, that kind of thing, and to University of Queensland. Highgate Hill nearby, Kangaroo Point, they all have those factors. And then outside of the inner city, up at the Redcliffe Peninsula, the suburb of Redcliffe, which has become incredibly popular in recent years, but the median price for apartments is still under 500,000. Apartment there, you've got all these wonderful bay and ocean views. So,
okay. The only other two, you've really covered a good lot there. The only other two places I'd add is St Lucia, which isn't far from the city, just on the other side of the river. Again, close to the University of Queensland, and Auchenflower, which has got a really nice sort of feel to it, which I really like for apartments as well, for both owner-occupier and investors.
Yeah.
Terry, just the last question before we go to Q&A for us both is, do you think investors can get both capital growth and yield in buying apartments?
Well, I think the point we've made several times is that yields do tend to be better with apartments. So you can get good yields, certainly. But if you buy strategically in the right locations, you're also going to get good capital growth. I know that a lot of people think you've got to choose one or the other, and I've never believed that to be true. I think if you choose your location well, and this applies right across Australia, buying in good regional areas, for example, you can get really good yields to compensate for higher interest rates, but you can also, in the right location, get really good capital growth. And I think everywhere we've talked about today has capital growth potential, as well as the potential for a good rental return. Always keeping in mind what we started with today, Rich, was those vacancies figures. And one of the things I say to people, and I think you alluded to it, is don't just look at what the rental yield is now, consider what it might be in 2 years' time, because we're seeing rents rising 10, 20% at the moment. Calculate what your rental return will be in 2 years' time. Because you're probably going to be, in many good purchases, you're going to be positive cash flow in a couple of years.
Exactly. Yeah. I mean, sometimes we use a spreadsheet and put in only a 3% increase in rent, but I think for the next couple of years, you can put in pretty much triple that at least, That's great, Terry. It's fantastic advice. Just in the last 10 minutes we've got, let's just go to our Q&A section, if you'd like to bring it up on your screen too, Terry. But we've got some here. Greg is asking, with the collapse of some construction companies, is this the tip of the iceberg? Should we stay away from off-the-plan builds? And if so, for how long? I'll have a go at that one, Terry. I think, look, great question, Greg. I think off-the-plan is not dead. If you buy from a reputable developer that's got a good history and they've got great specifications and great finishes and they build in a good location, then you can buy off the plan well. The key thing is to make sure your solicitor goes through the contract, checks the specifications, and when it says oven, make sure it specifies the model. Where it says the variation clause, this is the way a lot of people get caught out, in a variation clause. If it says 100 square meters, make sure you're going to get 100 square meters, not 95 square meters. because I've seen some contracts where the developer can have up to a 5% variation on the size. So make sure that sort of thing is removed from the contract and you pick a good quality developer. Any other comments on that one?
Yeah, I understand people's reticence given the media coverage of building companies going broke and how that scares people. There are services where you can actually check on the financial health of major building companies. So you can use services like that. That's something we're going to be offering at Hotspotting very soon, where you can actually do a check on the health of the builder that's doing your project. So you can perhaps have some confidence that they're not going to be one of those that falls over halfway through your project.
And also just one other thing on that is in New South Wales, the building commissioner, David Chandler, who's going around checking buildings, poking holes in any cracks. There's those sort of things that are picking up those faults during construction, rather than the terrible thing with Mascot Towers or Opal Towers in Homebush, where a lot of people have to move out of their apartments for 1 to 2 years to get defects fixed. Glenn's made a good point here about land taxes being much less with apartments. Yeah, that's a really good point. So obviously there is still a land component in the total value of the apartment, but it will be significantly less. So that's one other advantage that we should have pointed out. So good point, Glenn, in buying an apartment over a house.
Yeah.
Another one here, rents have obviously gone up due to lack of supply. What has caused the lack of supply? Did investors sell during the pandemic due to the boom in prices, or is there another reason? What's your thoughts on that one, Terry?
Lack of rental supply, I think it's very much been caused by investors dropping out. The market share of investors as buyers has been much lower in recent years than traditionally. And during the pandemic boom, if we can call it that, a lot of investors took the opportunity to sell. Now, state governments and to a lesser extent federal government, they keep changing the rules and they're never favourable to investors. They've actually made investment less attractive in various ways. APRA has sort of also put restrictions in the past on how much you can borrow. The federal government made changes to depreciation, and these things have accumulated. More and more people have just said, no, I'm not doing it. So the number of investors in the market has diminished, and so the supply has fallen. So the solution is they've got to stop discouraging investors and actually start encouraging them. And it's a really simple solution, and it's right there. They can improve the situation tomorrow. What they're talking about is building 1 million new homes. That's going to take 5 years. If it ever happens, it's not going to help people who need to buy rent a property now or next year.
That's right. Yeah, if they keep fiddling with superannuation laws and tax depreciation, they're just going to scare away investors even more, which is going to make the rental crisis worse, you know.
Yeah.
Or even worse, capping rents. Like the Greens have got this ridiculous policy of capping rents. That's just going to be ludicrous.
Make it immeasurably worse. Look, politicians never think beyond the press conference. That's the problem. They don't think through the consequences of their policies or decisions. If Australia was to adopt the policies of the Greens, we would end up like Ireland. Ireland is probably the best example in the Western world of a disaster with rentals caused by governments who have implemented the sort of policies that the Greens are advocating, like rental caps and increasing taxes on investors. You know, there's nothing available for rent. Anything comes up, there's a queue literally kilometres long.
Yeah, I think what we need to have, Terry, we need to have a webinar with sound policy ideas, sound policy sound bites, and we get all of the politicians one-liners and we provide a much more objective review. Anyway, that's in our pipe dreams. Let's keep moving on. What about migration patterns and people exiting the cities, I should say, regional locations?
Look, certainly, I mean, if you look at the population data, Sydney and Melbourne have been losing population to internal migration, people moving to other parts of the country, but they have still had good population growth because of overseas migration. A lot of it comes to the two biggest cities, and there's also natural increase, you know, the surplus of birth over death. So the big cities have still had population growth, but we're seeing greater population growth in other areas because of the internal migration factor. Queensland's getting a lot of it. Western Australia's getting some of it. Adelaide's getting some, and some regional areas, obviously, in recent years have been getting people moving. And it's contrary to what media says, it's not caused by COVID. It's been going on for longer than that. It's really about lifestyle, affordability, and technology, which means that people can work remotely. So that continues to be a factor.
Yeah, great. Someone's asking, please confirm which property types are included in unit and houses, e.g. where do townhouses and villas get included in your data? My understanding, Terry, is that villas, townhouses are included in the unit section. That's typically what happens. You concur with that?
Yeah, that one of the reasons why the data from different data sources is different is they have different definitions. But I think the general agreement is that anything that's on some sort of like strata plan is a unit. That includes townhouses, whereas anything that's standalone on its own title is a house. That's generally how they decide it.
So Robert's asking, can you comment on the growing importance of EV charging for apartments? Yeah, good point, Robert. Yes, I'm seeing a lot of the developers I'm talking to, and in their new developments, some of the councils are actually putting in a requirement to have a certain number of charging stations in the basement or in the car park area. So I think it's going to continue to be an absolutely important criteria for brand new builds, and need to be retrofitted potentially to older apartments too. Ralph is asking, do you have a checklist for apartment purchases? So Robert, we are very fastidious when we're buying apartments for our clients. We have a range of checklists that we use, and we go through a very thorough due diligence for when we're looking at apartments. But it obviously depends on the type of apartment, the purpose, whether it's a home or investment. But we do look at our clients' briefs and then provide a solution that's going to be tailored for their individual requirements. Sam is asking, what areas does Airbnb still work well? Well, Airbnb does work, Terry. I think, again, the locations is really the prime holiday locations. You're not going to find Airbnb typically works well in far-flung regional or western suburb areas. You're going to find it works very much in the prime holiday locations where there's very strong demand throughout the year. But again, it all just comes down to stacking up your numbers and making sure that the cost of the cleaning, the cost of Airbnb charges, and all of those other things are taken into account, and also that the building allows Airbnb lettings as well. Any other thoughts on that, Terry?
Yeah, I think what you said is true. But in addition, some of those regional cities where there's a lot of action, a lot of growth economically and with infrastructure. I think of, say, Toowoomba in Queensland, Ballarat and Bendigo in Victoria. Those are also attract a lot of tourists as well. But when you've got a lot of development happening, a lot of infrastructure, then you've also got demand for other reasons for Airbnb as well.
Okay. Sam's also asking thoughts on Bulimba, Balmoral and Hawthorne areas. Terry, what do you think of those areas?
Yes, object lesson here. If I can encapsulate my advice to young investors starting out, it's never ever sell. I used to own real estate in this area, Sam. I bought a house on a hill with a view of the river for $50,000. If I had been smart and not sold it, it would probably be worth $2 million now. But of course, I didn't understand that way back then. These are areas that have become increasingly gentrified. They used to be kind of almost down marketplaces, but they became discovered. Oxford Street, Bulimba is probably the most prestigious, busy, buzzing eat street in all of Brisbane now. Really good suburbs with prices well above $1 million. Probably the only issue there these days is the flight path issue, which has become a bit contentious for some of those suburbs. But these are great residential suburbs, sort of 10 minutes from the CBD, near the river, all of those lifestyle factors.
Okay. Mohit's asking, where would you suggest for capital growth and cash flow for a property around 300K as a first-time investor?
Okay. Look, in terms of houses, obviously you're talking about regional, although some of the Perth and Adelaide still have some of the bottom of the range suburbs where you can maybe get houses around that price, but there are regional areas that are still in that price bracket. Increasingly hard to find because you don't just want cheap places, you want places that are affordable with prospects for growth, like in Murray Bridge or Mount Gambier in South Australia, for example. Rockhampton in Queensland, you can buy in those prices still. Mackay, perhaps, Gladstone, some of those better regional markets in Queensland where pricing is still quite low. But I think, yeah, primarily you're looking regional, but there are options still out there like the ones up.
Sure. Sam's asking a very generic question for modelling. What would be a good average yield and capital growth assumption? Look, again, Sam, it depends on your objectives, but a good capital growth assumption should be 5 or 6% per annum, and an average yield. Again, it's going to depend on your income as to whether you're happy to negative gear or whether you need positive cash flow. So if you're looking for something positive cash flow, you're going to need to get above 5% as a net yield, and the higher the better. And there's different ways of achieving that kind of yield. It could be it's a holiday let, it could be a duplex, or it could be a house and granny flat. So there's a number of ways to get multiple incomes from one property. We've also got a couple more. We've talked about Mascot Towers. What can we do? Due diligence. As I said, to mitigate due diligence, we talked about the defect issues in apartments. The question is, what can you do during due diligence to mitigate that risk? I think, Terry, as I said, get a building inspector, get a strata inspection done, check out the reputation of the developer. But particularly when you're doing your strata inspection, look for issues that have happened in the past, particularly years ago, before Meriton really picked up their act. There used to be a lot of issues with water penetration, particularly around Harris Street at Ultimo, a lot of those buildings there. I remember going to a lot of them, and always every strata report I'd read would be water penetration, water issues. So make sure that that's the typical one that happens in apartments, is there's no issue. And if you're buying an apartment near the coast, obviously look out for concrete cancer, because the salt spray gets into everything. So that's a couple of tips there. Anthony's asking about St Kilda. Yeah, as I mentioned before, great place to invest. Anything to look for, beware of pitfalls. Again, I'll defer to my local expert in that area. If you do ever use our service, Anthony, we have an expert who's very, very skilled at buying apartments in that area and would love to give you some of the local information. A couple of questions about the super cap here, Terry. Do you see offloading self-managed super fund owned property following the recent $3 million cap discussion? Well, this is a big one. I would say to anyone thinking about it is don't act prematurely. Even though the government's announced it, it's got to get through both houses of parliament. And then the current government has said they won't implement it until after the next election. So it could well be repealed if the other side of government gets back in. What are your thoughts, Terry?
Yeah, I don't think people need to panic and take hasty action. I mean, I don't think there'll be a lot of people out there with a self-managed super fund balance above $3 million. There will be some. Yeah, just watch and wait. What you've just said is valid. They've got to get this passed. They've announced that they've got to get bipartisan support to get it through both houses of parliament. As you know, it's not going to come into effect until after the next election, so there may be a change. So nobody needs to take hasty action on. Just keep a watching brief on that.
Yeah, I certainly don't think, to the next question, it's going to encourage people to buy more property in their super fund. I still think it's a fantastic way to hold a portion of your self-managed super fund in with property, because in the pension phase and whatever, then you don't pay any capital gains tax if you sell it, and it's a much more favourable environment to own property in. So again, get tax advice on that before you make any decisions. A couple of questions just to finish up. Two more questions. Are 1, 2 or 3 bedroom apartments more attractive for rentals, particularly resale? Again, look, 1 bedroom apartments can be a fantastic investment, like places like Potts Point, Elizabeth Bay, Darlinghurst. They have very, very strong rental returns. So to answer that question, it's very location specific. You need to talk to 4 or 5 property managers in the area and identify what kind of rental you're going to achieve for each type of apartment. And it'll also be driven by your overall strategy. And last question there, we've got, what are your thoughts off the plan where builders asking for more money to cover rising costs? Well, the builder can't ask for more money if you've signed a contract. It's a fixed price contract to purchase your property. So again, there should not be any of that sort of issue arising. That's unfortunately the builder / developer has to cop that increase in cost. And And that's the way they're.
Which is why some builders are going broke at the moment.
Yeah, exactly. All right. Well, look, I just want to say thank you, everyone, for being on the call and on the line today. And look, if you do have any questions, there's my details if you'd like to get in touch. We would love to help you on your property journey. Thank you, Terry, so much for being on the webinar with us today. Really appreciate your insights, always full of great information. And thank you to all of the audience today who watched. And we encourage you to be safe on your property journey. Don't make rash decisions. Do your research, get the numbers. If you'd like some help in getting any reports, Terry's got some great reports to buy. And if you'd like help in executing your purchase strategy, we'd love to help you on the buyer's agent side. So thank you once again for joining us, and we look forward to joining you again on our next webinar. Bye for now.
Bye for now.